trading absolutely changed my life for the better, obviously. And inside this video, I want to show you a very simple strategy that you can use every single day, one trade per day, using this strategy at one very specific time of the day. And this strategy can hopefully allow you to make your first 1,000, your first 10,000, your first $100,000 as a trader. Now, I'm not making any income claims, you guys. It's just what's working for me. Most traders lose money. Like I said, do your own research. I'm not promising you anything here right now. I also don't expect you to believe me, because I want you to test what I'm showing you inside this video. Test it out for yourself. See if it works for yourself as well. And once you do, then you're on your next step to becoming a profitable trader, at least hopefully. So let's say you want to make 10K per month as a trader. Why 10K? Well, 10K is usually where life becomes a whole lot easier. You know, you can rent the apartment that you actually want to get in a very nice area. You can get a very beautiful car. You can go shopping. You can take your wife, your fiance, your girlfriend out for some nice dinner every single day if you wanted to. It doesn't really matter what your goal is, but 10K is usually the breaking point, the tipping point where life becomes nice. Okay, so 10K per month is your first initial goal. Now, I know traders who make way more than that. I have friends who make about 100K per month trading, which is absolutely, absolutely beautiful. But let's, for now at least, focus on 10K per month. Okay, beautiful K here. So 10K per month, how much is that per day? Well, we have 20 trading days in every single month. Why? Because you can trade from Monday through Friday, so 5 times in a week, 4 weeks in a month, so that's about 20 trading days. And divide 10K by 20, then you will arrive at a beautiful, beautiful $500 per day. Okay, $500 per day. How can we do that? How can we get there? Well, I'm going to show you a strategy that allows you to hopefully, at least those are my results from my past. Like I said, past performance doesn't guarantee future results, but just from my experience, this strategy will give you one entry signal every single day at one specific time every single day. And what I want you to do is make about, it's going to be very beautiful now, guys, 40 to 150 ticks per trade in profit on average. Okay, you will have days where this one trade, it will be a losing day. Okay, you will lose that trade. I have a win rate of, like I said, 80%. So you have about 20% of the time, so 4 days in a month where you will actually lose money. So we do need to maximize the days where we are in the green and minimize the days where we are in the red. Okay, so I'm gonna delete all of this for you and I'm gonna make this very, very simple. Now that we know that we need to make about 100 ticks in profit, because I actually skipped that part to be fair, every tick here in the NASDAQ future. So if I were to buy somewhere here, let's just say that I'm buying this low right here, and the low is at horizontal line right here at the 3/18. Okay, that is where I buy. Now, if I exit somewhere here, for example, doesn't really matter. We can see, now I hope my face is not in front of it. I think it actually is. Price. I cannot see it unfortunately here because my CapCut face here is right in front. There it is. That is, guys, this small move. You can see this here. It's already 220 ticks. So way more than we actually need, right? So if we get in here and we exit somewhere here, 100 ticks. That's 100 ticks. Now you need to know that every tick in the NASDAQ is worth $5. So if you go from 318 down here to, for example, 320, that is 2 points and 8 ticks. 8 ticks times $5 per tick is $40. So just from here to there, it's already $40. Now, in order to get to $500 per day, we only need to go from down here to roughly in this range. Okay? And this is a trade, guys, that can last a minute, 5 minutes, 3 minutes, sometimes just even seconds. So you can get there relatively quickly if you know where to enter and exit your trades. Now, I'm going to show you a way how this becomes even simpler. So, what you can use is you can use prop trading firms. Now, prop trading firms give you their capital to trade with, and they will get in exchange for risking their money, they will get 20% of your profits. So you keep 80% of the profits that you generate and they get 20%. But they take all the financial risk. You have no financial risk. Okay? So if we know that and they get 20% of your profits, you actually need to get to around, it's not exact math right here, you need to get to around $600 per day for your 80% to be actually $500. Like I said, not exact math, it's a little bit less than this, but you'll be just fine with this simple math. And these 20%, they will go to the prop trading firm, so about $100 goes to them. Now that changes everything a little bit, right? So you now need to make $100 more every single day, 20 ticks more. It's difficult, right? No, it's actually not, because the cool thing is you can trade with one account. So for example, I usually trade, at least for now, with $50,000 trading accounts. Okay, so they give me $50,000 in a trading account that I can trade with. And if I make, for example, $600 per day with this one account right here, then I'm left with $500 per day in profit. But the cool thing is, these prop trading firms actually allow you to copy your trades into multiple accounts. So you can place the exact same trade using the strategy that I'm about to show you in a very few seconds. You can copy this trade from one account into all of these accounts, and suddenly your $500 profit turns into, if you have 4 accounts, $2,000 profit. Now guys, if you are able to make $2,000 per day in profit trading, you have no employees. With the right strategy, you only need to trade a few minutes to maybe an hour per day. You have no overhead costs. And what kind of business does 2K per day in profit? 40K per month. Guys, that's already a business that, for example, if you have an online shop and your margins are 20%, 10% potentially even, and that means that they are generating 20K per day in revenue in order to get to 2K per day in profit. That's a $600,000 per month business, a $6 million per year business, a huge business, a juggernaut. And you're just sitting here all alone in your apartment, doesn't matter where you are, pressing a few buttons, buy and sell, and you can already get there just by using prop trading firms and the strategy that I will show you now. Okay? Now, that is how you get to more than $500, by the way. You can also do this, by the way, before I get started with the strategy. We already mentioned that we need 100 ticks per day, right? Well, the cool thing is, if you follow these principles here and you copy and paste your trades into multiple accounts, let's say you have 4 accounts, or maybe just 2 accounts, then you only need to make 50 ticks in profit in order to get to $500 per day, because your initial 100 tick profit goal with one account is now split into 2 because you have 2 accounts and you can copy and paste your trades in those 2 accounts, right? So now you only need to make 50 ticks per day. And I'll show you exactly how that is possible using this exact strategy now. Okay, so the strategy is very simple. Every single day at 9:29 to 9:30 a.m., you open up your laptop and you will see a certain situation. So yesterday, for example, I traded this and I'm going to show you exactly what I saw. So at 9:30 a.m. or 9:25, this is usually where I open up my laptop, I see the following. I see the market was trending up, and here we had this range. We had this volume profile. In case you don't know what the volume profile is, it just shows you how many contracts were traded at any given price. So it's not volume over time, which is usually what you see at the bottom of these charts. It's volume over price. So this yellow line, for example, is the price where most contracts are traded at that time of the day. Here, at these price levels, very little contracts were traded compared to, for example, this area where there were quite a few contracts that were traded. Okay, what do I see? I see that the market trended up, and here we are now in the range. The cool thing is, above this high and below this low, and you might already know this as support and resistance, there is a lot of liquidity. Now, liquidity, guys, is something that you need to understand, okay? So for the market to go back and forth the whole time in between this range here, that means one thing. Neither the buyers nor the sellers have enough power to either break through these highs or go through these lows. So we don't have enough power to make a breakout. Okay? We remember this word, power or strength. It doesn't really matter how you say it, but the logic needs to say the same. We need more power, more fuel to the fire in order to break out either through these highs or through these lows. Now that we know that, the market, and you need to understand that, always wants to transact where there is liquidity. Okay? The market always goes to areas, it's like a magnet to the market, where they can market and big players, big banks, institutions, where they can trade and build up huge positions. So for example, let's say you work at a big hedge fund and your manager tells you, and you're just a trader, your manager tells you, hey, we need to buy 1,000 or 500 contracts of the NASDAQ at an average price of, for example, 400. So here at this level, they want to buy 400 contracts on average, okay? Now the problem is, if you were to buy 400 contracts once the market gets there, in one go, you just click buy and you buy 400 contracts. What happens? Well, because there's not enough liquidity, not enough sellers wanting to sell 400 contracts at that price, because it might be too cheap for them, they might want to sell you their contract at this price. Well, you and yourself, because you click buy with 400 contracts, you push up the price to this level most likely. So you buy maybe 100 contracts here at this level, you buy another 100 on average here at this price level, another 100 here, and another 100 here. Now, what is your average price? Your average price is not 400 anymore. It's now 410 or 415. So you failed your mission, right? You didn't build up a position at the price that you were told to. And that's a problem for a big bank or for a big hedge fund. Because if this goes in the wrong direction and you didn't get the right entry price, well, 400 contracts going the other way is very, very painful. So what does it mean? Well, it means that these traders now are under pressure to find enough liquidity where they can buy 400 contracts, for example, down here. Now, the cool thing is, all of these retail traders, they think about support and resistance, right? So right here, the level held up quite a few times. And I'm going to make this a bit more obvious for you guys. The level held here and there, okay? So we have support here. Cool. So what do most people do? Well, they buy, they see support is holding up, they buy once more. They see support is holding up once more, so they buy. And all they want to do is, hey, the market is trending up, so we will see a breakout at some point to the upside. And they want to profit from this move here. Okay? The problem is, we don't have enough fuel to the fire yet. This breakout won't happen as long as we don't see liquidity being swept. Liquidity being swept means the stops of the people who went long here need to get fished. So for example, if you go in long here, where's your stop loss? Well, right below this level of support, right? Right below this level of support. So you have 50, 100, 200, 300 contracts potentially that are here as a stop loss order. Now, if they bought here, the counter position to buying is selling. So in order to get out of their position, either for a loss or for a profit, they need to sell their contracts. Okay, so if 400 people, to stick with the example, went long here, where are their stop losses? Well, somewhere down here. So if the hedge fund started buying 100 contracts here, 100 contracts here, they now need to get 100 contracts here and 100 contracts here in order to get the average price of 400 and build up their position. Okay, so usually what happens at 9:30 in the morning, a big player will make up their mind and they say, hey, I want to get into a big position, so I need to sweep some liquidity. So what happens is, for whatever reason, and guys, support and resistance doesn't work. It's a scam. It doesn't work because of this. A big market player will start to sell, for example, 200 contracts here, maybe just 100, but enough to push the market below this level of support. Okay, they get in a smaller position, but just enough to bring the market below this level of support. Because why? That is where they can, first of all, get out of this position for a profit, tiny profit. But here, because all of these stops are at this level, they can build up a huge position and then push the market to the direction and to the price level where they actually want to exit this huge position. And this happens every freaking day at 9:30 a.m. So all you have to do is mark out where you believe, and we will double check this in just a second, is liquidity. In this case, we're trading in a range, so this is super simple. I have my levels at the 98s roughly and at the 58s roughly. So I'll just wait, and I'm going to switch over to a 1 minute candle in just a second, guys. Now, before we switch and before I show you the entry levels and where you can enter, I want to make you think about, if the market breaks below this level and we sweep all of this liquidity, how far can we go? So if the market breaks below this level, okay, where will it stop? Will it stop here? Will it stop here, here, or here? Because there's an answer to that. It's not a very complicated one, to be fair. For that, we use the volume profile. So the volume profile basically indicates to you where there was market acceptance, a lot of contracts being traded, and market inacceptance or price inacceptance, not a whole lot of contracts being traded there. Now, what you need to know is current or previous high volume nodes are potential levels of resistance, guys. The market can flush through low volume areas extremely fast, but the market usually is a lot slower and tends to reverse at high volume nodes. So what do? Well, we have our thesis that the market will go below this support line or above this resistance. But where will it then turn around and actually go into the direction the market wants to go? Well, we take a look. Where can we find high volume nodes? And it's going to be super easy. I'm gonna mark out my lows and highs once more. We can see, obviously, guys, a high volume node here for the current day, some high volume here. And if you take a look at the previous days, then we can see we are exactly in between a high volume node as well for the past day. It started somewhere here, so we might mark this a bit higher. And the highest volume node was somewhere here. So I'm going to mark out these 3 levels. And this is where I want to get potentially active. Okay, so if the market breaks below this level of support here, I want to see the market go either to this level, or to this level, and then does a very specific thing. And if that happens, I go in the first time, and here I might go in the second time. So we will now switch to the 1 minute chart, and we see exactly what happens at 9:30. And obviously I have the benefit of hindsight here in these videos, so I want you to test it out for yourself so you can actually see that this works. Where did the market go to? Surprise, surprise. Guys, surprise, surprise, right? It went right to our level, 380. 380. We swept all of this liquidity and we went to 380. And if you want to see how this actually looks like, so if you want to see inside these candles, you want to see the buying and the selling, well, let's switch to bookmap. Bookmap is the tool that I use to see or to look inside these candles. And this is exactly the situation. So you can see here, 9:30 a.m. right here, okay? The market opened up at this white line here, this white dotted line. And this was the low of the range right here somewhere. Okay, so the low, I'm sorry, was at the 400s roughly. So I'm gonna mark out the 400s. 400s right here. Okay, and then I'm gonna draw out the 380s in this case because that was a level of interest for us. 380s right there. And as you can see, the market, once it opened up, went below this level. We got liquidity here, guys. These lines, here, 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 and here, is liquidity. They are liquidity. That means other people's stop losses, potentially. Not always, but most likely, at least in this case. And what happened? Well, surprise, surprise, exactly what I told you. We had some stop losses here, and the market went. We got buying power. We got fuel to the fire. We got fuel to the fire. We saw all of this liquidity just swept. It's gone. The market went lower, even further. Where did it go to? Guys, we swept this liquidity. Most liquidity was here at the 80s. Okay, was it at the 80s? Let me double check. Oh, at the 400s, I'm sorry. So most liquidity was right here. We swept through all of this liquidity. And where did the market go to next? To our level of interest, where we believe the market will turn around. We believe the market will turn around at that level. And look what happens. 380, so roughly right here. Boop. The market came in. We had some more liquidity coming in. The market also grabbed that liquidity. And then it shut up. So all you need to do is wait. You lean back, 929, 925, whenever you have time on your hands. You open up your charts, you mark out these levels. And once the market breaks below this level that you marked out, where you know, hey, there's liquidity. And once this liquidity is swept, you wait for the market to go to either one, in this case, one of these three price areas. And you see what happens. You see and you watch what happens. And if you see the market go there, and then you see aggressive buying coming in, and selling pressure going a lot lower, meaning this right here, all of these big red bubbles, aggressive selling. But do you see the change from aggressive selling to a lot less selling? And then aggressive buying coming in. Look at these green bubbles here. Now look at this green bubble. After we reached our level of interest. Do you see this change? Do you see this for the very first time? Get in. 390. 390. So somewhere right here. Boop. That is your entry level. 390. Where is your stop loss? Below this low, obviously. If we have some further liquidity, maybe below that level of liquidity, so somewhere maybe below here at the 378s. So you get in at the 390s, your stop loss 378s. Okay, that's about 45 ticks roughly. That is your stop loss. Now your goal, guys, is either 50 or 100 ticks. Okay, so if you have two accounts, it's 50 ticks. If you have one account, it's 100 ticks, 25 points. Okay, So let's see. You get in right here. Right here. And like I said, if you have 2 trading accounts, from here, to 2 trading accounts is all the way up here to the 403s. And if you have multiple trading accounts, if you have only 1 trading account, then it's here to the 415s. Now the cool thing is, this trading strategy actually works in a way where you can get another entry level once we go above this previous level of liquidity. So you can get in for the very first time here, and your second entry, if you want to go in with a bigger position, should actually be right here. Okay, these 2 possible entry levels. Either you're very fast, you go in right away, or you go in once we break this level of liquidity, so at the 400s roughly once more. So first entry here, second entry possible here. Okay, and guys, if you go in here, 390s, the market, and we can just fast forward a little bit, the market went within a matter of a minute. I can remove this. Within a minute, you can see this. We got in here, and the market shot up right away. 87 ticks. 87 ticks, guys. Now, we came back a couple of times, as you can see. I'm going to fast forward. I think it was right here. We came back to this level a couple times. And then the market just basically, boop, shot up to that level. But even if you only trade the market open, because this is a further way, you get into the 390s right here. The market went all the way up to the 415s, guys. To the 415s within a minute. 87 ticks in 1 minute. 87 ticks. If you have 1 trading account, it's not 500 yet. Okay, no worries. It's about 400. Poor you. I'm so sorry. $8,000 in a month if you do that 20 times in a month. The cool thing is you can also protect yourself using this strategy. So once you are in the green, for example, 40 ticks, 30 ticks, 20 ticks, it doesn't really matter how much, you can set your stop loss that you've placed here to break even. So if you have a fill or kill strategy, meaning it either goes to my take profit or to my stop loss, well, what I recommend you doing is, if you are in the green, 87 ticks, but the market cannot go above that level yet, well, at least set your stop loss to break even so your downside is protected. Okay? And you can do this every freaking day. Every freaking day. Let's take a look. Every freaking day. These are the chances. You only need to look out for where there is potential liquidity. Okay? So here in this case, like I said, about 80% win rate, roughly. In this case, I'm not quite sure. This might have not worked out or not give you an entry, because this range right here, I would have need to see if there was liquidity somewhere here. I don't know. So potentially no entry. And we can see just all the way how this works. So for example, let me show you another very simple way of doing this. Here, most likely, very simple. Yep, that's exactly what we need. High here, so most likely, and you always need to validate this using a bookmap and the volume profile, obviously, but then you can see where you actually should enter and exit. So high volume node here, and potentially, liquidity there, and also some liquidity here. So this would have actually worked both ways. So we swept this liquidity, turned around, went right back in. We also swept this liquidity down here and then went right back in. So 2 possible entries here on that particular day. Now, I would say 4 out of 5 times in a week, you will find a setup. 1 time a week, so 1 day in a week, you will not find an entry. So that day that I just showed you previously, there was just no entry. So you just keep your hands away from the keyboard. That also happens, okay? But once you follow the strategy, once you do that, and you do that with 1 trading account, 2, 3, 4, it doesn't really matter how many. That's how you make very good money. I just recently talked to someone who made $30,000 in a day. $30,000 in a day because, because he made $1,000 per trading account and he has 30 of these funded trading accounts. Guys, 30 grand in a day. If a normal business does 30K in a day in profit, they do $300,000 or more with a 10% margin, obviously, in a day. 300K per day in revenue. That's a huge business. It's an absolute juggernaut. And trading allows you to make money from the comfort of your home in a very straightforward way. That is why I love this. That is why I live for trading, because simple strategies can get you there already. And in case you don't have time at 9:30 a.m. every single day, which I do understand sometimes you work in or you have other responsibilities, then guys, check out my channel, because I show you ways and strategies on how you can trade nearly all day, every day, at any given time, using the strategies and the principles and the logic behind my strategies and my it's like a work of art, you know? Once you understand the markets and once you get them, it's like you can read the future. You can see what's about to happen. It's a beautiful, beautiful feeling. So without further ado, guys, I wish you a great day. If you have any questions, feel free to comment down below, like this video, subscribe to the channel, and I'll see you in the next one.